I'm George Ratiu, Manager of Economic Research with Realtor.com. We are welcoming spring blossoms and the promise of a better year ahead as we seem to be leaving the pandemic behind. The world remains uncertain, however, with the war in Ukraine in its 7th week and economic sanctions impacting supply chains along with the US economy. After successfully navigating through 2021 supply chain bottlenecks, factory orders dropped in February for the first time in 10 months as demand for durable goods weakened. On the other hand, with drop-offs in COVID cases, consumers are traveling and spending more. The ISM Services Index sped up in March after 3 months of declines, yet companies remain concerned about labor and supply shortages, which are driving inflation to a 40-year high. With high prices, consumers are resorting to borrowing to meet pressing financial needs. Consumer credit increased in February on account of a jump in revolving utilizations like credit cards. The good news is that the job market remains strong for most people. The number of jobless claims dropped to a level lower than before the pandemic. There was a data adjustment by the Department of Labor to account for seasonality, but the bottom line is most companies are cautious about layoffs given the labor shortage. With employment near pre-pandemic levels and inflation still accelerating, the Federal Reserve is signaling increasing concern over prices. We can expect faster rate hikes and balance sheet adjustments in the months ahead. What do these factors mean for real estate this spring? We're in a time of transition, with sellers still in the driver's seat, but surging mortgage rates and prices are putting a lid on demand. Interest rates rose again this week. The rate for Freddie Mac's 30-year loan topped 4.7%, while other sources reported rates over 5%, a level not seen since February 2011, when the typical home in the US was priced at less than half of today's median price. The jump in mortgage rates over the past quarter is signaling a decisive turning point for housing markets. Not surprisingly, mortgage applications retreated, with both purchases and refinances dropping. As we enter the sweet spot of the spring season, housing is in clear need of more homes. There is good news on that front. Realtor.com surveyed American homeowners, and we found out that the majority of those planning to list this year are likely to sell in the next 6 months and bring more affordable homes to market. An even better bit of good news: Realtor.com's weekly housing numbers are beginning to pick up on this flow, with last week seeing an increase in the number of freshly listed homes. There's movement in the right direction. Stay well, enjoy the spring blooms, and I'll be back next week with more information.